Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a recent filing that involves a leadership shakeup at a company. Let's see if this change is a smooth transition or a complete corporate roller coaster. We are looking at an 8K filing from Wolfspeed, a company that makes semiconductors. This report is all about a change in their top leadership, specifically their chief executive officer. The big news is that Robert Furl has been appointed as the new Chief Executive Officer and will also join the Board of Directors starting May 1st. He's taking over from Thomas Werner, who has been holding the position temporarily. After a short handover period, Thomas Werner will still be around as a director and chairman of the board, but not as an employee. This means he'll still have influence on the company's direction, just not in a day-to-day management role. So who is this new CEO? Robert Furl has been working as an executive vice president at a company called Spanems Osban, which deals with making things that use light and sensors. There's nothing unusual about how he was chosen or any strange connections to people in the company. He has a degree in electrical engineering. Let's talk about what he's getting paid. His starting salary will be $750,000 per year. That's quite a bit of money. Starting the year after next, in 2027, he can also get a bonus based on how well he does his job. He's also getting a nice Pensbane-Osban bonus of $1,000 to be paid in 2 chunks. There is a catch though. He has to stay with the company for a year. Otherwise, he has to pay it back. The company will also help him move to Durham, North Carolina, paying up to $200,000 for relocation expenses, which will also cover the income and withholding taxes that are due when he gets paid. He also gets the usual benefits, like being able to participate in the company's health plans and getting reimbursed for business expenses. Plus, he'll be protected from legal issues if something goes wrong, thanks to an indemnification agreement, which is like an insurance policy for company leaders. Here is where it gets interesting. The company is giving him some stock options and restricted stock units as an extra push to join the team. First, he's getting restricted stock units, or RSUs, worth $2,500,000. These RSUs will vest, which means he'll actually get them over the next 4 years, with a quarter of them vesting each year on the anniversary of his start date. Second, he's getting an option to buy company stock, and this option is designed to be worth at least $2,500,000. This option also vests over 4 years. But wait, there's more. Around August next year, he's set to get even more stock-based awards. He'll receive another batch of RSUs, this time worth $2,000. And he'll also get performance stock units, or PSUs, worth $3,000 out. How many shares these PSUs turn into depends on how well the company's stock does compared to its competitors over the next few years. The actual number of RSUs and options he gets depends on the company's stock price. They'll be using the average stock price over the 30 days before he starts, which they call the reference value. Let's look at what happens if things don't work out. Mr. Furl is a Wolfspeed's employee, meaning he can leave or be let go at any time, with or without a reason. If he's terminated without a good cause or quits for a valid reason, he gets a severance package, but he has to sign a paper saying he won't sue the company. If this happens outside of a change in control period, he'll get a lump sum payment equal to 1.5 years of his salary plus his target bonus. But if it happens around a change in control, he gets even more, like 2 years worth of his salary and twice his target bonus. There's also a clause to protect him from certain taxes if the company changes hands. Of course, he has to sign an agreement promising not to share company secrets or work for competitors for a year after leaving. He has to sign a standard agreement about keeping company secrets and not competing with them. He can't work for a competing business, try to steal their customers, or poach their employees. In addition to the CEO change, Glenda Dorchuk has been appointed as the chair of the Governance and Nominations Committee, and Marvin Riley as the chair of the Compensation Committee. The company put out a press release about this whole thing. You can check out the press release for more details. So, what's the real story here? Wolfspeed is bringing in a new CEO with a strong background in semiconductors, offering him a hefty compensation package to make the move. The company seems to be betting big on his leadership to drive future growth. However, there are always risks. Integrating a new CEO can be challenging, and it's crucial for him to quickly understand the company's strategy and culture. The generous compensation package could also raise eyebrows if the company's performance doesn't improve significantly. On the other hand, this could be a great opportunity for Wolfspeed. A fresh perspective from a seasoned executive could be exactly what the company needs to innovate and stay ahead in a competitive market. In conclusion, this leadership change is a significant move for Wolfspeed. It's a mix of risk and opportunity, and only time will tell if it pays off. Thanks for watching. If you enjoyed this corporate decoder analysis, please like, comment, and subscribe for more insights into the world of business.